Hey, good afternoon, everyone. Welcome again to another Friday podcast. My name is Hector Aguilar with eXp Realty. I have the pleasure of having Brian Menges and also Vicente Herrera with me this afternoon. As you know, this podcast we bring to you is what I call the Foreign Investment Friday podcast. We've been focusing a lot on bringing some real estate developments to you as a consumer, to folks that are thinking about retiring or maybe making a move to a different part of the world, specifically Mexico. So today we have Vicente Herrera with eXp Mexico that's going to share with us a couple of developments that he has available to us in the city of Mérida, Yucatan, one of Mexico's most popular destinations, becoming more and more popular as Cancun and Tulum and Puerto Vallarta and some other potential key markets like Cabo and La Paz are becoming a little bit more expensive. I believe that Mérida and Yucatan has a lot more product to offer at a more affordable price. And so Vicente is going to share with us a little of about maybe 2 or 3 developments. But more importantly today, I'm excited because we have Brian Menges, the CEO of Capling SoBankable, a Canadian mortgage company who's actually financing the takeout loans on purchased properties for both Americans and Canadians. And I'm excited to go over some of the products and programs that he has available for you as a consumer. So with no further ado, Vicente, good afternoon. How are you?
Very good. Thank you, Hector. How are you? Thank you, Brian, for being here. And thank you all for taking your Friday afternoon to know about financing and some projects in the state of Yucatan. Thank you very much.
So I know that
so I'm going
that you were going to share a little bit about a development called Green International in Mérida. Do you have that for us to share?
1 second, yeah, because I tried to upload. Okay. Do you see my screen?
I'm going to load it right now. There you go. We see your screen. Go ahead and share.
Okay, great. Well, the first development, it's called Green. It's in Mérida City. It's a project of 125 apartments distributed in 25 models of buildings of 5 apartments, ranging from, I'm going to close the numbers, in 763 square feet up to 1,850 square feet. Price says ranges from 130,000 to 270,000. It has several amenities: a Garuda gym, games room, grill zone, the cave zone, kids room, swimming pool, gated community, meditation zone, business center, and deliveries for summer 2025. Here you can see some pictures. With this property, you need to put 15% down, then 20% in monthly payments up to the delivery date, and it can be financed by SoBankable upon delivery with the 65%.
Okay, fantastic. So in order to secure a unit in this particular development, it requires a 15% deposit?
15% down. Then there's a financing for the other 20% from the developer with monthly payments.
Okay.
And 65% can be financed by SoBankable upon the delivery in summer 2025.
So what you're saying is with 15% down, the seller would do a let's say a carryback for another 20%, making it 35%. And then SoBankable would be providing the main financing tool, which would be 65% LTV. Is that what you're saying?
That is correct, Hector.
Okay.
Yes.
Fantastic. I like this development simply because it's affordable. It looks like you have units available between 130,000 and 270,000. Correct?
That's correct. Yes.
Wonderful. Okay.
Yes, and there's lots of amenities. You don't need to leave your complex. Even though Mérida is the second safest city in North America, in the American continent, it is a gated community and it has 24/7 security.
Fantastic. I know that's probably something that most foreigners are wanting to make sure that it's safe and secure. So it's good to know that it's in a gated community and they have some protection there as well.
Yes, thank you. The other development I'm presenting is Zaguán.
Okay.
It's a mixed-use development with 104 apartments, 6 penthouses, office spaces, and 3 commercial spaces. It is in the north of Mérida. It includes a swimming pool with a sky view, a yoga room, a rooftop bar, an outdoor gym, and a dry cleaning service. This is, I think, one of my favorite developments right now in Merida. Delivery is for January 2025.
Okay.
And I'm just going to talk about apartments. We have apartments ranging from 1,100 square feet all the way to 5,500 square feet.
Oh, wow. Spacious.
Yeah, huge. Prices ranging from 260,000 all the way to 1,235,000.
Okay, so a good range, anywhere between, affordability, a little midpoint, and it sounds like you've got some luxury options as well. So it's a good development. Good
Yes,
option.
very, very nice. I mean, it's very, very well situated. Appreciation of the assets in Merida, in the north area of Merida, it's around 15 to up to 20% yearly. So it's great. I mean, it's a great investment as well.
Awesome. So there is definitely some return on investment of 20%, year after year. And, when you're investing, of course, you're looking to get a little bit of a return on your investment. So it seems like it's a good opportunity to invest in some entry level real estate and be able to get a good return on that.
Yes, that's correct. And it can be also financed by SoBankable.
Okay.
You have to put 20% down,
okay.
Then 10% upon delivery, and 70% can be financed by SoBankable.
Okay. So in this particular case, it would be 30% down total, right? And then 70% loan to value being financed by SoBankable.
That is correct.
Okay. Well, again, having financing options is always good for consumers, right? Because they don't have to necessarily come in and pay all cash, right? Number one. So you can leverage your purchase with the mortgage and also be protected because you're going to, as we'll find out when we speak to Brian, there's some tools in place that's going to protect you as a consumer as well. So we'll talk to Brian a little bit about that as well. So what else do you have for us, Vicente?
And I'm not going to present this last one. This is a luxury apartment in the Emerald Coast in Yucatan.
Okay.
Mangata, it's an exclusive 12-unit oceanfront apartment complex located in the Highway Progreso del Chac, kilometer 29.5. Kilometer 29.5, this means that Merida to Progreso, it's around 25 kilometers.
Okay.
Then Progreso to Del Chac, it's 29. So we're talking about 55 kilometers from the north of Merida. This is in a municipality called San Bruno. And here we have a complex. It's a complex designed as a resort with premium amenities. And apartments are ranging from 3,600 square feet all the way to 5,100 square feet. Prices ranging.
By chance, do you happen to have the presentation for these other developments that we can look at? Because I'm still looking at the original one from Green International.
Yes,
Can you switch over to the Mangata Emerald Coast?
I see in my presentation the others. Okay, let's try it.
In the meantime, I know that the Emerald Coast of Merida is a very sought-after community because it's beachfront, right?
That is correct, yes. Can you see it now?
I do not know. If you go ahead and share it, I might be able to add it to our presentation.
Yeah, that's what I'm trying to do. I cannot upload it because of the size, but let me see.
Oh, I see. Okay. Well, I'll tell you what. Let's. What we can do is at a later point, if someone's interested in getting some information about any of these three developments, you're free to please send us an email. You can send me an email, or you can text me, and we'll go ahead and send you some additional information about each of the developments so that you have some more detailed information in terms of square footage, location, the amenities that it offers, and some different price points. So I can put you in touch with Vicente Herrera, and we can kind of look at some of those developments if you are interested in those. I see you pulled up Mangata here in the background.
Okay. Well, just finishing with this, apartments ranging from 3,600 square feet all the way to 5,100 square feet. Prices ranging from $740,000 all the way to $1,272,000.
So this particular development seems to be a little bit more luxurious, right? It seems like it has a little bit higher entry point and upwards to about 1.2 million. So certainly maybe an option for maybe a little bit more affluent people that are looking for more properties that are more luxurious. So it's a good option.
Yes, and remember, we also have several other options and new developments in the Emerald Coast with a little bit lower price or much more. But well, today just wanted to present this, and this also can also be financed up to 70% by SoBankable. Delivery is this month.
So all of these three developments, in my understanding, are currently being built, correct?
Yes, that's correct.
And all three of them have a deadline, a due deadline, if I remember correctly. One was for 2025. Green International was delivery date 2025. Saguan and Mangata have delivery dates of 2025 as well, right?
No, Mangata this month.
Oh, Mangata is delivering this month.
Yeah, that's why down payment is 30% and 70% finance.
Fantastic.
So it's ready to move in.
What percentage of sales or how many units total in Mangata are they selling?
I believe Mangata, there's only like 30% available.
Oh, okay. So there's 70% already sold, which means that the development is well on its way. And we've had different, already some buyers in the development. So it's good to know.
That is correct, Hector.
Wonderful. Well, Vicente, I thank you for presenting those three properties in Merida. Again, if anyone is interested in getting some more information about these three developments or any other developments in Merida, Yucatan, please reach out. And I'll put you in touch with Vicente so he can maybe find the right development that's in your budget. Today, I'm super excited. One of the reasons why how Brian was presented to me was through Vicente. And Vicente mentioned already that SoBankable has offered financing to various clients, I'm assuming, at 70% of the sale price. And so I wanted to invite Brian to be with us today and talk a little bit about CapLink and SoBankable and some of the financial tools that they do bring to us. Brian is the CEO and co-founder of CapLink Group of Companies. He has an extensive experience in all aspects of residential and commercial real estate finance. CapLink has been a private mortgage lender in Canada for over 27 years. And so he comes with an amazing financial background, specifically in mortgages. So Brian, welcome. Thank you for making the time to join us. Tell us a little bit about yourself, and more importantly, tell us a little bit about what CapLink and SoBankable is doing for consumers in Mexico and other parts of the world.
Okay, great. Thank you, Hector. And thank you, Vicente. Yeah, if we can, I'll just go on hopefully everybody can see our slide deck here.
Yep, we see it. Nice.
CapLink itself has been in operation for 27 years as a private lender. And then what happened in 2020, we expanded into the United States with a particular focus on snowbirds and anybody that is not a resident of the US that wanted to own real estate there. And as we were doing that, we got attracted to the Mexican market. We had done some one-off deals in Mexico and then decided to go in with both feet, lending to, again, the same market, foreign nationals, so non-residents of Mexico who would like to own a vacation home or more realistically, a rental property. So we've developed programs around that, and we were very positive about Mexico as an investment for anybody, ourselves included. So there's growing demand on the real estate in the market. We see a significant amount of Americans and Canadians not only want to buy there as a second home, but at least with the Canadians that we've been talking to, they actually have a view to retire there. Mm-hmm. We don't see that so much with the Canadians we finance in the US. So at the risk of confusing people, CapLink has been established in Canada, again, for 27 years. So the brand itself was known here in Canada, was not known in the United States or Mexico when we entered. And we decided to refresh the brand and landed on SoBankable. And So if you go to our SoBankable.com website, which we'll view it near the end of this presentation, you can see that it addresses all three markets. We can do commercial, residential in the United States and Canada. In Mexico right now, we're strictly doing the residential mortgages for the non-residents.
Fantastic.
Yeah. So again, we've touched on this. I don't want to belabor it, but what's important for anybody and what we've really come to appreciate in dealing in Mexico, when an individual, an American or Canadian, is acquiring real estate in a foreign country, there's obviously a lot of concern about, just owning real estate somewhere else. And
Absolutely.
we find we are the only company that is not a resident of the United States. So our head office is in Canada, who has 6 mortgage banking licenses in the States. We have multiple licenses across Canada as a securities dealer and mortgage broker. And because of it, we are regulated. Actually, we have 17 regulators in 3 countries. And everything we do and say is watched by somebody. And so when it comes to handling people's confidential financial information, anything to do with them, everything for us is done on a secured website portal. And we store that information in Canada. And so, and none of the data we receive from people in any regard to them is ever recirculated in any fashion. There have been incidences with lenders in other countries where that security wasn't there. And just to highlight what we are licensed as. So in Canada, if you're familiar with it, we're licensed Alberta, British Columbia, Saskatchewan, Manitoba, and Ontario. We are a licensed investment fund manager as well as mortgage broker. We are a mortgage banker in Arizona, California, Colorado, Florida, Texas, and Washington. So we lend in 5 provinces in Canada. Okay. In the United States, we can lend in 35 states. And in Mexico, we're not limited to the states that we lend in, but we've chosen to limit ourselves right now to 6 states in Mexico where obviously Americans and Canadians are buying right now.
And I'm glad that you mentioned that that it's not only limited to those 6 states in Mexico, because there are other states that are now expanding just because of what I mentioned before about, Cabo, La Paz, what are the major destinations that are familiar to most Canadians and Americans. The budgets are getting a little bit higher. And so there's expansion in other smaller ports and other smaller beach towns. And it's good to know that it's not just limited to these 6 Mexican states.
No, we're gonna follow the growth in Mexico. I'll give you an example. We were dealing on a property in it was north of Cabo San Lucas. Cabo's gotten quite expensive, and this little community was about 40 minutes north of Cabo. And as soon as I saw it, I instructed our underwriters to lend there. It is such a gorgeous, it's a small, relative population-wise, small community, amazing beaches. That's where the growth is going to go. Right. So we're not afraid to lead into those new markets. What's been an advantage for us, obviously, is, we have very strong borrowers from Canada and the US that are buying second homes. So it's been good. So SoBankable, so we have CapLink and SoBankable. So specifically to SoBankable, that's what we call our international lending platform. We fund loans on, using real estate security in 3 countries. And that is critical. You have to understand we're the only lender that can structure a deal, such as, let me give you an example. We had a Canadian in Vancouver, British Columbia, owned a property in Palm Springs, buying a property in Huatuco. Okay. And what we could design there was an ability to finance using equity on the Palm Springs property, use that to help purchase the property in Mexico, along with a mortgage in Mexico on the property to close, with the intent that they would sell the property in Palm Springs once they got their property in Huatuco, and then pay off that debt. So we have done financings. So far, I haven't done a triple yet, but I've done a few doubles where I take security in Canada and Mexico, or Canada and the US, whatever facilitates the transaction. Though our name says bank in it, we actually are not a bank. We're a private lender
Correct.
portfolio lender, and as such, we can be creative on our financings. We not everybody fits in a square box, so we're quite, adaptable.
And then I found out, I have a little bit of an experience with Mexico real estate. Back in the mid 90s, I actually functioned for a mortgage company that no longer is in existence in providing financing and also some retirement destinations in Mexico. So I'm really familiar with the process. And it's good to know that there's someone like CapLink who is definitely investing and lending in these states, because as you mentioned, there's growth not only in the popular destinations, but other communities of Mexico as well.
Well, there's a paper, I can show it to you, but it's on our website. I wrote it. It's called A Case for Investing in Mexico.
Mm-hmm.
And, very sincerely, the as a lender, I would not blindly go into any market and risk, any financial loss. Mexico, for me personally, if you look at the demographics of Canada and the United States, you can see that Mexico's demographics are what Canada and the US had 50 years ago. And so at my age, you get to the point where you wish you could do a do-over, take what you know today and go back a few years.
Sure.
As soon as I really studied and got to know Mexico, I realized there is a second chance. You just have to go to another country.
Right.
So now what's critical to understand is how we lend in Mexico. If your attendees are familiar with a fideicomiso, or commonly referred to as a bank trust,
Mm-hmm.
Just quickly how it works in Mexico. When it originally structured its constitution, it did not allow for foreign ownership anywhere in Mexico. In 1973, there was an amendment to Mexico's constitution such that individuals who were not resident of Mexico could own real estate anywhere in Mexico except in what they call the restricted zone. The restricted zone is within 50 kilometers or 30 miles of shoreline,
Mm-hmm.
or Pacific and Atlantic side.
Correct.
And then 100 kilometers or 60 miles of the dry land borders like US and Mexico.
Mm-hmm.
So in that band, if you're a foreigner, you need to own inside a trust.
Mm-hmm.
And I have to tell you, based on some experience we've had in Mexico, people begrudge having to own real estate in a trust, and I would tell you to welcome it, because the trust itself, how it works is that inside the restricted zone, you have to be a Mexican corporation or a Mexican person, or as we use the trust, a Mexican bank becomes your custodian of your land.
Right.
But believe me, they have no interest in your property. They hold it as your beneficiary. You're the beneficiary as your trustee. They hold it for you really in name only. Mm-hmm. And they want so little to do with that property that if you're not familiar with the trust, there'll be a first beneficiary, which is the owner. Mm-hmm. There'll be a second beneficiary or a substitute beneficiary that's there in the event something happens to the first beneficiary, and they can step in and liquidate the asset or do whatever they have to do to take care of it.
Right.
So as a lender, what gives us a lot of comfort about lending in Mexico is we become the first beneficiary, like a first mortgage on a property in Canada or the United States.
Correct.
The first beneficiary, the owner becomes the second, and the substitute becomes the third.
Wonderful.
And like the bank, we, as a lender, we have no authority over your property unless we get into a defaulted situation. And then what we can do at that time is very restricted. It's basically manage it like we would a foreclosure in Canada or the US. So I have to stress, where it's advantageous to you as a consumer is that title is guarded by a bank. And there have been issues around titles, in years gone by, but I've never seen anything compromised that is held in trust by a bank. So that's actually should give individuals a lot of comfort. So the type of loan programs that we have the conventional takeout financing. So that's where you're purchasing the property long term. We do bridge loans during the construction period. Now we can't take security. Like if you're buying into a condominium project, the title to your unit doesn't exist until the strata plan, or in Mexico it's called the strata scheme, until it's registered. But in the interim, as when you heard Vicente say, you put a certain percentage down and then you make advances during the construction phase, we can take security on an asset in Canada or the United States or both to give you the funds to advance during the construction phase. And then when it's finished, we would discharge our interest in Canada, the US, or the other assets that we hold and secure our mortgage or our financing on the Mexican asset on exclusively. So freeing up the titles for the interim security. And so right now we're financing purchases of real estate to a maximum of 70%, 3 to 5 year terms, and 30-year amortization. And I should point out, because we just made this amendment today, Vincent doesn't know it, but we are running into the situation where real estate, of course, is appreciating rather quickly in Mexico. So you may contract to purchase a property today, not take possession of it for 18 months, and there's been some appreciation in the value of the property. If that occurs, we will increase the loan, not to the 70% of the new value, but to at least 75% of the original value. And that bump in loan size will go and handle probably all your closing costs. So that's just something new. So the bridge loans are secured on real estate in Canada, the US, and Mexico. It's interest-only loans because they're bridge. They could be first or seconds in Canada and the US, and then we would take out the financing in Mexico when the properties are ready. Also, on the pre-construction side now, we've run into many consumers who are like, okay, I can put 30% down or some amount down. And there are some developers who are saying, if you put down a certain percentage, you don't have to put any more money until we close. But the developer wants to know that you're a qualified candidate, and so do you. So we will pre-qualify you under the assumption that nothing material is going to change between when we approve you pre-construction to when you take possession of your property. And so that gives you comfort and gives the developer comfort to move ahead with you. So that's basically my presentation. I wouldn't mind if I could just jumping onto our website, Hector, if I can do that.
Absolutely. Let me go ahead and do that. And as we do that, in terms of the loan terms, I saw that terms are 3 to 5 years. Are those terms renewable, or is it a one-time term?
They're always renewable.
I'm sorry?
They're always renewable.
Okay.
I mean, I could fix it for a longer term. Americans tend to like 30-year AMs and 30-year fixed rates, but we can envision, we see our interest rates coming down over time, given the market.
Correct.
So we don't want to lock somebody in at a higher rate for 30 years. So right now it's the discretion of the borrower, but they can pick a shorter term. And then as things, again, I can't see our rates going up. I can see them going down. So they take a 3-year term and see where we're at in 3 years. Our loans, I should mention as well, are open to repayment without penalty.
Good.
So if you get in with us and in a couple of years there's a reason you want to liquidate, there's no penalties to you to do that.
Fantastic. I asked the question simply because, as you mentioned, here in the United States, we're used to 10, 15, 20, 30-year loan terms. However, the general lifespan of a mortgage tool is typically somewhere between 7 to 10 years, even if it is amortized for 30 years. So to your point, it's good that, they can extend it or maybe even renew it at some point.
Oh yeah. We've never put a borrower in a situation where the term has come up and they're performing and we don't renew, especially because funds are limited in Mexico, we would never want to put a borrower in a position where they're in a forced sale position because we're calling the loan. The only time that we would put ourselves where we're calling a loan is because an individual has not performed. And based on our experience with the quality of borrowers that are buying in foreign countries, I don't see that as being a problem.
Wonderful. So now share
I
with us
can't
a little bit
control
about
the
your website.
I can't control the website, so I don't know if I'm doing something wrong.
If you just click over to the tab where the website is located, then you'll be able to scroll.
Oh, correct. Yeah, sorry.
You'll be able to scroll and show us.
Okay.
So as you scroll on that tab, we'll see the scroll on our screen, which we are now right now. Great rates in Mexico for Canadians.
Yeah. Okay. So this is our landing page, and I would just show you that depending on where somebody's looking to get financing, they just click on one of the icons. On this website here, we have some tools that you can use. One is there's the paper there, A Case for Investing in Mexico. And I like to highlight the paper because my experience thus far has been that there are two purchasers generally involved in acquiring a foreign property. And I very lovingly say one is the dreamer and one is the pragmatist, the individual that's going to do all the number crunching. So if you're the dreamer and you're trying to convince your partner to come along and buy a property, I would recommend they read the paper, A Case for Investing in Mexico, because there's sound economic reasons for making investments right now. So on here too, we have limited products in Mexico because basically we're providing residential first lien loans. Right. But there are some useful tools here. We highlight the markets that we're in right now. You just have to touch the zone and you'll see which communities that we're lending in currently. On the tools there, we have under learning modules, just so you can find it. If you're interested, you can go. It's just going to flip over here. Just give it 1 second. We've made a little 3-minute video that explains what a fideicomiso is. We don't seem to be going there very quickly, so I don't want to drag this.
Go ahead and click on it again, see if it will load.
It's okay if it doesn't.
Well, at least I know that there's a video there that explains what a fideicomiso is. You can find it under the learning modules, under tools and resources. And
so, I've gone into, here we go. So what we've gone to now is what we call the Mexican mortgage calculator. Early on when we started, we realized with Canadians and Americans who have no experience in buying in Mexico, that they did not have a full appreciation of the costs associated with closing on a purchase in Mexico.
Correct.
In Canada and the US, if you're buying a property for $200,000 and you've got to put 10% down, let's just pick that as a number. So you got to put $20,000 down. What your typical Canadian and American would do is say, okay, I need $20,000 plus some legal costs to close and some adjustments. So I'll budget $5,000. And so $25,000, I've bought my property. It's not like that at all in Mexico. And so we'll run you through the calculator here just to give you an example. So you can pick whatever currency you want, US, Canada, and Mexico. In this case, I'll do it as US dollars. And so it's a $500,000 property. We'll go to Baja California. Let's say it's La Paz. You want to purchase a vacation property. And I can tell you that although we have a selection here, we actually don't discriminate between an investment and a vacation property.
Okay.
Americans in particular will know that lenders add costs for any reason. We frankly prefer that you're getting an investment property, because when we're qualifying you for the loan, if you tell us what you're going to rent it for, we will factor in some of that rental income into your ability to qualify for the loan.
That is ideal because many investors want to put their properties up in rental pools that maybe the property development will manage for them, or they can put them into an Airbnb or VRBO, and they can figure out what the going rate is per night, and they can do some estimations. And it's good to know that they can take that income, and you'll take that income into consideration when qualifying.
Yeah, we just did a deal. I was stunned at the income. It was verifiable income that this property in Tulum was earning. It had like 85% occupancy rate when normally you would use 60. and it had even after paying a management fee to the property manager, they were making great income, so they qualified just on that. So what we're trying to do here is we're trying to we have live feeds here on exchange rates, but if you're American and you want to think in US dollars, everything's in US, it's Canadian, and then of course the peso as well. So what we're doing here is we took the value of 500,000, 70% loan to value is 350. We have our lender fee, and we get down to the actual down payment. What we then calculate, and this is just an approximation, I have to stress that because we don't know until we get on a specific property in a specific location exactly what the closing costs are going to be. But this is what I'm referring to here. This is where the first-time buyer in Mexico might have a bit of a shock. Sure. And that's, there's notary fees. These are, to be clear, these are third-party fees that are out of the control of your realtor, out of SoBankable's control as the lender, and even your lawyer. Okay.
In fact, it's even out of the control of the developer. Yes. Right? Yeah. And it's good to note that a notary fee in Mexico is not like your public notary here in the United States. It's an actual attorney that's assigned to a specific region of that municipality where you're buying. So it may seem to you that it's like a normal notary fee, but it's not. It's an actual notario público, which is a licensed attorney in Mexico.
Yeah. The way I like to explain it to borrowers, because I mean, part of what we tend to do is unintentionally counsel people on how to buy in Mexico, because when we start working with anybody that wants to buy, we want to assure they're going to be successful. So Correct. The reason when we qualify you, there's 4 things we look for: available income to service the debt. We look for a credit score that's better than 660. If it's less than 660 for any reason, we can work with it, but it might change the structure of the financing a bit. But okay. if you're better than 660, you have the income, then what the next one we stress is we want to make sure you have sufficient funds to close. And that is not just the down payment. That's these costs that are being estimated Correct. Here. And for example, in Mexico, you're going to find once you acquire real estate that it's really cheap when it comes to utilities and property taxes, and in no way are they the same burden as you have in Canada and the United States. But it's because it's front end loaded, right? You're going to pay a transfer tax, you're going to pay some fees to the government, and so you have to. And again, this is an approximation, but in this example, that could be somewhere around 30 to 32,000. So when we're qualifying a consumer to buy, we take the down payment cash that they'll have available from our loan, and also the closing costs. So when I'm talking to you, I won't be saying you need 157,000 right. close. I would recommend to you that you have around 200,000, because the other variable is exchange rate.
Correct.
And so part of what we do here, and it's since we've done this again, there's a little bit of shell shock for the first time consumer, but when they realize 2 things: number one, the carrying costs of the property once purchased are nominal relative to anything we know in Canada or the United States. That's number one. But 2, we are seeing such a significant appreciation in real estate values that I tell people within 2 years, you're going to recover these closing costs, either by the savings you have on the operating costs on the property or the appreciation in your property. So we get down to now, so in the 4 things we have to satisfy to approve you, we show that you have sufficient funds to close. Mm-hmm. You can debt service the loan, and you have the credit history that's satisfactory. The 4th thing we have to do is get an appraisal of the property, and that's out of all our control. We just get a local appraiser to do the work for us. So right now this is the financing, but what I want to show you, just so you can understand, we are based in Edmonton, Alberta, Canada, and our funds, our capital that we're lending at the present time are all in Canadian currency. So when we close on a transaction, let's say that we're lending you a Canadian, like, a couple $100,000, we are set up as a currency trader as well. So we will exchange your Canadian currency into Mexican pesos, and so far we've always had the best exchange rate. We will put it in a position that it's ready to close, and our lawyers that we use in Mexico will have access to the funds on the closing day and can direct it to the seller wherever they are.
Okay.
But there is, on this website, it says here, gain on exchange, learn how. So let's just have an example here. So we've got a property, another vacation property, and this time in Canadian dollars, we're just randomly picking a loan of 350,000. And what we're doing right now is showing you the advantage that you have. And it's the thesis of the paper I referred to earlier, where we say buy in pesos, borrow in Canadian dollars, doesn't matter if you're American or Canadian, and then earn revenue in US dollars, either by being an American and having income at home in US dollars, or rental income in Mexico that's in US dollars. Because in this example here, we have 350,000, an interest rate of 11.9, and a Canadian payment of 35.87. What happens is, I did a 50-year study, and 92% of the time you are profiting on the exchange from US dollars to Canadian dollars. And that lift that you get reduces the face rate of the loan, the nominal rate, to an effective rate, which is something less. And it depends, like today, the exchange rate between Canada and US currency, that payment you would be making has an effective interest rate of 7.85. Because what you're going to find in Mexico is there's a seemingly higher cost to borrowing funds. Like you see 11.9, and some people, they recoil because they see that. But you have to understand two things. One, in Canadian currency, again, there is an exchange rate advantage, an arbitrage that comes naturally between Canada and US currency. But also, when you're buying, in the paper, again, that I compared buying a property in Newport Beach, California, where I lived many years ago in that area, to buying in Puerto Vallarta. And Puerto Vallarta has become one of the more expensive markets in Mexico. So I'm comparing an expensive ocean property area to an expensive ocean property area in the United States. And you may think that if you get financing in the States, for 6% to buy a property in Newport Beach is a better value than 11 or some percent in Mexico. But you're wrong, because that property, the same amenities, and in my case study, it was a 3-bedroom, 3-bathroom ocean view. You're going to pay at least 3 times in Newport Beach what you would pay for the same property in Puerto Vallarta. So though you may have a nominal interest rate that's higher, your actual costs of borrowing is significantly less than if you were to finance a similar property in Canada or the United States. And then you factor in the capital appreciation that comes because the market is so aggressive right now. I can tell you, I updated my study. I wrote the paper originally in February of 2023, and I updated it here in January of 2024. And real estate values in Newport Beach had gone down as much as 25%. And what we're seeing is a general reduction in real estate values in key areas in Canada and the United States, where in Mexico it's exactly the opposite. Correct. So this, as a lender, this is why I'm excited to be there.
And also reassured that the values are going to be continuing to go up, so there's security there.
Oh, absolutely. I mean, it was interesting, if I may say, in working with developers in Mexico. One is he was from Canada originally, but he's been building properties in Mexico for 15 years, and he was pretty genuine. He said to me, Brian, I don't sell the dream. He says, I sell the return on investment. And he said 2 things investors want to know when they buy in a foreign country. Number one, they can sell it when they want. The market has enough liquidity that they can sell it. And we can check the boxes on key areas in Mexico, certainly right now for that, but also that they're going to have a gain on their investment. And
Sure.
again, that is apparent as well. But so that's kind of SoBankable and CapLink and what we're doing in Mexico in a nutshell. And I'm happy to answer any questions if there are any.
Well, I appreciate you providing us information as to what SoBankable does provide for consumers, specifically Canadians and Americans. A question that I have is, what have you seen is about the average loan or purchase that you've seen some of your clients do in Mexico? What's the average are you seeing right now?
I would say, well, as an average, probably around that 350 mark. We will lend in American dollars. We'll go as low as 100,000, where
Okay.
a couple of firms that try to compete with us, their minimum is 250. And so because we go to a lower loan to value or a lower loan amount, we allow people to buy very nice properties in the 250 or even 150 plus range. On the high end, where the markets we're in right now, I would say that the largest loan I've seen in there or purchase price is about 550. There is the sweet spot for international purchasers seems to be around the 350 mark.
Mm-hmm.
Of course, you're going to see some, multi-million dollar properties, but those are few and far between. The average person, I think, that's buying a second home in Mexico that is going to also be a revenue property will be in that price range, about 350-ish.
About the 350.
We're seeing a lot of product in that area and in different markets. There's still a lot of really nice property available in that range.
I know Vicente presented us with a few developments in Mérida, Yucatan that range from about 170,000 upwards. And he mentioned that you would finance up to 70% LTV with the combined, let's say in this particular case, I think Green International was 15% down from the consumer. The lender was going to piggyback with another 15%, if I'm not mistaken, and you were going to come in with a 70% loan against the difference. Can you walk us through what that dynamic looks like, how that works out?
Well, sorry, in that specific example, or
for example, in the Green International development, he mentioned that the consumer could come down with 15%, and the builder would carry a second or carry a seller financing for the 15%, and you would finance 70%.
Yeah, and so in that specific example, what would happen is at closing, the individual will be responsible for getting their 30% in there, so they would be paying off the developer's loan, and we would come to on closing day with the 70%.
So the consumer would have to at some point pay that difference, that 15%.
That's right.
Okay.
And depending on the builder and their program, it varies a lot as to when all their money is put into the project.
Okay. Vicente, have you had any examples of consumers being able to finance in those developments? I think there's one of them, if I remember, Green International isn't delivering to 2025, but any other developments where SoBankable has financed that's going to be delivered, let's say, early 2024?
Not yet. As we just started working with SoBankable, we didn't have an option for financing. But what I can tell you, and Brian, I think Brian will agree, is that in Mexico, as a market for Canadians and Americans, Canadians and Americans were not used to financing because they're really there's almost nobody who can finance in Mexico, or at least it's extremely slow. So most buyers they're buying cash, and now that they have an option, they will probably buy more than one property and do the financing.
You bring up a really good point, and this is my second question to you, Brian. Let's say someone already purchased a property all cash. Is there an opportunity to maybe refinance, do a cash out, and still keep it as an investment property? And if so, what would be the maximum loan to value on something like that?
Same would be 70%. The caution that we have there, it depends how it's being held. If it's already in a trust, or if you do have an option of establishing a Mexican corporation and holding investment properties in a Mexican corporation, but we won't lend to a corporation. And to be very honest as to why we choose what vehicle to lend through, which is the fideicomiso. It's very simple. Our ability to foreclose, if we ever are in that situation, is probably, it would take us 4 to 6 months. Where I told you I did some one-off deals in Mexico, and I have a uncontested foreclosure in Puerto Vallarta right now that I think we're pushing the 3rd year.
Oh wow!
So if I had to live through 3-year foreclosure periods, I wouldn't be lending in that market.
Right. And it's probably safe to assume that those are very, very rare. I mean, one-off.
No, it's not. You know what? We're not loan-to-own guys by any means. So what if someone fell into a distressed situation? Our first instinct is to find out what the problem is, and if they can't rectify it, then we would encourage them just to liquidate the asset, pay us off, and preserve their equity. We're not into boxing matches, but but to your point, Hector, your original question, the question is possibly, because because it depends how it's held and where it's held. We can take a Mexican corporation and use it in a fideicomiso, as well as a Canadian or American corporation. So there are structures where we could take the asset, put it into a trust, and then finance it. But we caution you that would trigger all those closing costs that you've already paid. That's the downfall.
That was going to be my follow-up question. Would it be possible for someone who already owns a property in a fideicomiso, if they would have to rewrite their fideicomiso in order to allow financing? And it sounds like it could be, but it's going to cost you some fees.
It's doable, but yeah, it would trigger. On a more optimistic note, in the fideicomiso, you can own more than one asset. So we have a gentleman, for instance, he was committed to purchasing a property in Huatuco for $300,000, and then he found us, and instead of buying one property, $300,000 cash, he went after 3 of the same units, like in the same complex, $100,000 down on each one, and a loan from us on the balance. And the way we registered that was we put a loan specifically on each unit, with the understanding that if he ever sold one, it wouldn't result in his whole loan having to be paid off. It's just the amount attached to that one unit. That
particular unit. Fantastic. That's wonderful. So the people do have options.
Oh, they do. We know that it's an uncomfortable situation dealing in a foreign country. So we are happy to spend time with the borrower, walking them through different scenarios to make sure that they're comfortable moving ahead.
Wonderful.
And I should say too, our lawyers that we use are Mexican lawyers, but they're fully bilingual, and they write and speak incredibly well. It makes me feel bad because I can barely speak English, let alone Spanish. So I find it remarkable how fluent some people are who that's not their native tongue. So
it adds an additional layer of confidence, right, for someone who's thinking about buying a property in Mexico as an investment or their second home, and so know that someone can service them in English pretty well.
And what we do too, because of now we have experience in lending in Canada, the US, and Mexico. If a borrower is very cognizant about the process of borrowing in Canada, we can relate what they're going through in Mexico to what, so we say, okay, look, you're taking steps 1, 2, and 3. That's the same as 1, 2, and 3 in Canada. And they go, okay, I get it. So there's a lot of options.
Yeah, it doesn't differ too much other than the fideicomiso, of course, from the onset. And the closing costs, right?
But those closing costs you recover, because they're not the actual cost of setting up the trust is really not that much. It's you're going to pay those closing costs whether you use a fideicomiso or a corporation, or if you could do it in your personal name. Correct. You're going to pay. Everybody does. So I mean, it's no different than if you're in Vancouver, British Columbia, right now they're charging transfer tax on high-end homes of, I think it's 2% there. That's exactly what you're paying in Mexico. So it's not exclusive to Mexico, but it is more, it's common there.
Right. Well, Brian, I can't thank you enough for sharing, about SoBankable and the opportunities that it does present to consumers wanting to invest in Mexico. Out of curiosity, does CapLink have maybe in its future eyeballed maybe other countries like Belize or Costa Rica or maybe like Panama, where we're also seeing an influx of expats, American and Canadians wanting to purchase there as well?
It's a great question. Thanks for asking, Hector. Our dream is to be able to follow Americans and Canadians wherever they're buying. We're currently in Belize right now working on some projects there. And I love that country. So, and Belize is 15 years behind Mexico.
Yes.
So we expect to bring Belize on in the future. Costa Rica is something we're interested in. And so anywhere that Americans and Canadians are going to, we hope to follow them as long as there's a legal structure there that we can work in.
Of course. What's good to know. Once again, Brian, thank you very much for spending an hour with us. For those of you that have been watching us, I want to thank you for joining us live. For those of us that are going to watch us on YouTube, if you have any further questions, please feel free to send me an email. You can also reach out to me via direct message at my number. You'll see it there at the bottom, 626-255-2783. Once again, I'm Hector Aguilar, joined by Vicente Herrera of eXp Realty Mexico and Brian Menges. Thank you so much for joining us today. I hope this was a wealth of knowledge. And again, if you are interested in making a purchase anywhere in Mexico, reach out to us. We'll put you into the right hands and even help you finance the purchase. Leverage your money, save, instead of buying 100% cash, you use 30% down and some fees, and then you leverage against your risk for 70%. So once again, I'm Hector Aguilar with eXp Realty. This has been another podcast of Foreign Investment Fridays, and we look forward to seeing you on our next one. Take care, everyone.
Thank you.